Everybody, good morning. Good morning, good morning, good morning. What's going on? Wade, Larry, Don, Dan, Goose, my man. Love to see you as always. John, Rex, Andreas, Egger, Eric, Ed, Arturo, Rob, Craig, Cliff, Jacqueline. Probably didn't say that right. I don't know. My accent crazy. Anyway, Gary, Amy, Francois, Steve, Svenborn. Good to see everybody. Larry, Nina. Don't recognize your name, but welcome. Maybe I do. I don't know. Helen, David, Craig, Thelma. Good to see you as always. Jim, War Dog, Joseph, Anthony Del Rio. Good to see you. George, Alan, Carlene, Mary, Thrifty. Good to see you. John, Shin. Don't recognize. Well, maybe I do recognize that name. And Merle, Wrongamer, back to work. That sucks. And hope to see you later, my man. Jan, Don, good to see everybody. And look at this. Look at this. Somebody might have said that DPZ might be going down. Holy moly. Holy moly. This might just be the beginning, too. Dun, 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 dun. Oh my gosh. Where could we go? Look at this. Look at this. This might just be the beginning. Somewhere down there. Watch out, baby. I know a couple of my Termite Trading Lab members said they were making look like their account was doing pretty good this morning. And there you go, Goose. I hope you held on to that one. Just took time. I was early, as usual. And we still got a long way to go. Long way to go. So hopefully somebody heard me on that one. Hopefully. Yeah. I tell you what, man. So yesterday I posted a piece and it was in Discord. Let me take a screenshot really quickly and bring it over here. I didn't even plan to say anything about this. Let me find it. I pinned it to the channel. There we are. Jump to it. Right, here we go. Copy this. I put this in, the company had me do a Telegram, and now there's a Telegram version of this too. So right here, check this out. This is, this is just a screenshot. This thing we do right here, this trading, this thing, right? And this show is for active traders. If you're not really an active trader, you're probably not going to find the benefit in watching this. This is not like investment advice. Like, that's not what I do at all. I'm more of an active trader's kind of information. Like, what do we need to pay attention to now, right? So out of, it's a grind, like 240, and my pencil not working here for some reason. 240 out of the roughly 250 market open days in a year, roughly. There, give or take a few. Now, about 10 of those, and Goose will commonly talk about this, 10 days are big portfolio movers, and they tend to be big market movers. And you have to be in the right stuff. And you never know. You never know when those 10 days are. All right? Like, if you're heavy in crypto, there's probably going to be like 10 awesome days in the year. And then a grind like the rest of the time. And that's just it's kind of the way it is throughout the market. Now, Monday and Tuesday of this week, I saw a huge, pretty huge portfolio gain. We're talking about that kind of money across my family. Now, that's not me by myself. That's across my family's accounts. And we set new high water marks in most of the accounts for the year. Now, yesterday, I watched about 21,000 of that flow back off. And, that's the ebb and flow of trading, active trading. And I'll probably set several new high water marks as we go through the rest of the year. You have to find your style. Like, if active trading is your style, you got to find what type of active trading is your style. If you're more of an investor, a buy and holder, it's not really what I do. All right. That's not, at least not around here. You're probably not a great fit for what I'm doing. I swing trade a lot of smaller gains. All right. A lot of these things I talk about every day are small gains. And I take my shots at some of the big movers, like this DPZ thing here and there. I didn't put a lot of risk on it, relatively, and I just left it hanging out there. And like people saw, I put a play onto, I put it out there for everybody, the PSA, a storage company, and that moved way faster than I thought. I put it out as the chart of the week last week. I didn't really show it on YouTube here, but I put it on Discord, I put it on Telegram, I put it on X. And if you don't follow me everywhere, maybe consider doing that. But I threw it out there, and it worked out right to the target, way faster than I thought it would. And so you got to take a little bit of bigger shots. You take lots of small shots. Like I make small gains all the time, and that's what I designed the Apollo to do: is book a lot of those smaller gains really fast. All right, that's what I designed the tool for. Now I make hundreds of those small trades, thousands really. I mean, like hundreds might be, light. It could be thousands by the end of the year, any given year. And then I have those bigger trades, and then I have some that are epically large. Like anybody that's heard me talk about Mora, I have 6 figures on that trade. I have a nice 5-figure amount on NEM. I might have 5 figures on SWBI, and I've got a low or a mid 4-figure amount on TGLS. And those are going to take possibly years to play out on those. And so I have a few of those just hanging out there. And for those of you that know my story, my best trade ever took 18 years to play out. And I'm not an old dude, so I tend to get lucky. And I've always kind of gotten lucky in the market. And, being a stock picker and stuff, I do tend to get lucky, and I do. It's not, everybody says, it's not luck and stuff, but kind of, I always have been. I didn't know what I was doing when I picked Red Hat Linux back in 2003 or whatever it was at the back of the .com bus, 2001, 2003. I don't remember which one. I don't remember where it bottomed out, but it bottomed out at like $3.50, and I bought it. And then, rock along 18 years later, after selling calls and all this stuff, IBM bought it out for $190 a share. That took 18 years. All right. I don't know. I had hair on top, not on the sides. Now I got nothing on top and barely on the sides. And, it's been a lifelong journey learning this stuff. Now, a day like yesterday is not the day to put your head in the sand. All right. Like that was very key. It's a day to hunt opportunity, cutting out weakness. And, there's been plenty of 75-point down days. That was only 1.39% down. There's going to be plenty more if you stay in this game long enough. And it is a game. It's the world's hardest game. And if you haven't heard me talk about that, we can go through it, but this is the world's hardest game. And, all the things I said yesterday, I was beating the drum a lot. That if you were sweating it yesterday, if you were stressed to like 7, 8, 9, 10, 11, especially if you're at this, if you were at this at 11, if you were stressed out, like, oh my gosh, I'm going to be broke, I'm going to lose my house, whatever, I'm going to have to refund my trading account, you were trading too big or too aggressively. Please do yourself a favor. Be careful. All right. Somebody left a comment on my YouTube last night that I was too vague, and I said be careful too much and be cautious. I don't feel like I was talking to that person. So I think they were watching the wrong content creator, probably, because, and if the things I'm saying aren't resonating with you, that's cool. I'm probably not talking to you, because all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results, and I may never get another prediction right again. This presentation is intended to be informational, educational, fun, entertaining. It is not a recommendation to be buying or selling anything, all right? No stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. And if you desire that personal financial advice, you need to hire and consult a financial advisor. I'm not sitting here being like all the other YouTubers telling you to buy this, buy that. I'm not even like Jim Cramer that's like buy, buy, buy. That's not what I'm doing. It's not what I'm doing at all. All right. I'm sitting here trying to find an edge, and it's those hundreds of smaller trades that we sift through to find the bigger opportunities that we can try to push a little more chips into, and then hopefully we find the longer term big winners that really move the needle. So it's lots of small stuff that gives us the ammo to take shots at the bigger stuff. And then some of those big things work out very, very well. And then we have to wait for the major market turns. You know, we only get a big move in the market once every 5 or 10 years, typically. COVID was the last one. So here we are almost 5 years later. We might see another 5-year cycle, could be 7, could be 10, before we get another big, fast move in the market where we can make a lot of money. So you got to bide your time in between. And that's difficult for a lot of people. I understand it's difficult. Patience is freaking hard. That's why I say it all the time. Patience and discipline. Hardest part of this. Now, we had jobs coming in right there, a little higher than expected. A little higher. Yet everything seems to be kind of okay here this morning. Seeing a little bit of pop overnight, up 16. We zoom this up. I want to talk about the NASDAQ here in just a minute, because I put out that trade on SQQQ if you're in Discord or Telegram, and I know they replicated it over to Telegram. That can be kind of a, you know, we're still basically inside, right? Even though that wasn't a classic inside day, we're still inside the range of what we did right here. We're inside the range of what we've been done the last couple days. And this is indicative of the choppy top that I said we'd probably see. We may keep doing moves like this and inching it up higher and higher and higher as we get to that 58, possibly 6,000 level up there on ES. This is S&P 500 and right here. All right. Now the market opens in about 30 seconds or so, 10 seconds, I don't know, 10, 20, 30 seconds. And we'll probably see this take some back off of the drop. Now, I wanted to discuss this right here and show you what I saw. Now, I warned when we break down below here, probably going on down. And there goes a whole bunch of stuff right there. That high, that low. This is the 3-point tool. That high. Look where we bottomed. We did that after the close, actually. Look at that number. 1272. That was a 1272. That moved down right there. Very classic place to bottom. Now, when I saw some price action right in here yesterday, I changed my mind very quickly on staying short. I wasn't so sure we were gonna stay short yesterday. In fact, I think it was right. I think it was this candle right here is the one I was very cautious about. And I think this should have been on a log scale. Yeah, right there. So we came up just shy of hitting the 1272. We rallied back up. I bailed on the SQQQ, booked at like 54%. We didn't do this till after the market closed. This spike down that actually hit all my alarms right there. I couldn't stay in it that long. You can't trade options after hours, so I was like, this can lead to a pretty strong reversal. And that's, look at where we are. We did this right after the close, and now here we are up here. Now this 1, 2, 3, that can be a 2, so that can be a 1, a 2. And if we go on up higher, push this little move right here. 1, 2. This correction could be over. If we push this move on up here to this level, right in here, turn down, go for a number 5, a 3. This would be a 3. This would be a 4, and this would be a 5. If we do that, we're probably going to get another correction, and possibly go even higher from here. That's what to watch out for. Now, not everybody's clear on how I do all the things I do, and that the point of this channel is not to teach you how to do it. It's just to find the stuff we need to pay attention to. All right. So, how do we do that today? Watch out for that 2328 level. And if you're like, NQ, what the fudge is that, JT? NQ is the NASDAQ 100 E-mini futures. To convert these numbers to roughly QQQ prices that you might be familiar with, divide by 41. That's kind of the factor that's built into this right here. Now, it's not exact. 41 is closer to the NDX, the NASDAQ index right here. All right. This is closer to divide by 41. This is the futures for it. You wonder how the mainstream media pundits know, how the market's going to open. It's this right here, the futures. ES, that's the S&P 500. NQ, that's NASDAQ 100. RTY, that's the Russell 2000. And the one I don't really talk about because I think it's full of crap is YM, the Dow. And why YM? I don't know why YM. Like, it makes absolutely no sense. But YM is the Dow. So if you're interested in the Dow, there you go. Dun, 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 dun. And hitting the highlights. I'm very, very cautious here. That was a wicked turn down. I warned about this. We may see this rip right back down to 2100. And if we don't hold it, coming back down to 2000. If we don't hold that, could be cruising on down to 1500 on the Russell. I was warning about this. How we hit resistance, we may come ripping right back down on Russell. Oil, nice strong day yesterday. But look at that gap down. Whew, we closed up here, opened back down here. And the forward curve is expecting oil to ease up. That's quite interesting. I think they got it wrong. I think we're going higher in the longer term here. Quite possibly. So watch out for a retest of the roadmap line. I don't think we've finished that yet. And if we break below it, we can head on down. If we stay in the vicinity, pop back up, break above these highs right here, probably cruising on up to 90. I did take a preliminary long position on oil yesterday, and if you're interested in that, Termite Trading Lab has the details. Dun, 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 dun. Gold. I was concerned yesterday that we might do that. We hit right there, found some resistance. We need to push on through. We may find resistance here, and then push on through. If we're going to get to the target up here, then we may do another one of these bigger pullbacks that could last another couple months. So there's we've got resistance at 24.90, 25.34, and about 25.90 right there on gold. So if you're chasing gold, GLD, watch out for the resistance as we go higher. SI is still being a laggard. It is not broken out. It did not make a higher high. 35 is still the target, but we need it to break out. This is starting to concern me slightly because it's very similar to the Bitcoin pattern it did before we went and touched the roadmap line. So we may see that right there, how we dipped and came back up and then rolled off to the roadmap line. These patterns are the same patterns all the time. And the person that left a comment yesterday on YouTube obviously didn't understand. I'm just going through the charts looking for the same pattern, handful of patterns. Same handful of patterns on all these different charts. That's what I do every day because that's the high probability pattern that I know and can trust and does pretty darn well for me when I trade it. So Ethereum, still looking for that pop. I know there's lots of stuff drawn on a lot of these charts, but they're just updates. Like, you come back for a few days and you start getting in the flow of this thing. Those 1 minute alerts firing off like crazy. This thing ramped up and ready to pop. Those spot ETFs are coming out. And, somebody did ask in Discord in the wrong channel, what's your play? I'm long this baby right now. I've got some exposure to this right here. ETHU. It's 2x leverage, 2x bang for your buck. It does have a high carry cost relative. Like I don't plan on staying in forever, but it has a 0.94 expense ratio, but it also gets you 2x leverage on that potential move in Ethereum. And if we double Ethereum in the next couple weeks, months, possibly into next year, this thing's going to go up like 400%. You know, that's 4x your money right there. Potential if Ethereum doubles. Not too bad. Not too shabby. That's why this is my weapon of choice right now. Maybe like, why this? Why whatever? Why not something with options? Ethereum spot ETFs are coming out next week. Like, we don't really have optionable ways to play Ethereum here in the United States without getting a little creative with it. And I'm not big on creative stuff because it's not easy. You just keep it stupidly simple, and it's easy to not mess it up. All right? Relatively easy. I mean, you still mess up. I've seen plenty of people that can, there's people out there that can break a stainless steel ball bearing. I mean, we can mess it up. That's why I like to keep it stupidly simple. Now, dollar probably coming down to this zone right here, 102 to 103. Probably going to sit. We may find some intermediate resistance here. We're definitely getting below that low over here. That can lead to some extensions lower on the dollar. Now, TSM was popping. Now we're giving it back a little bit. Cautious. This still probably needs to go cruising on down to the roadmap line. I don't think good earnings is going to save. Now, I was kind of teasing the question, like, were their earnings good enough to keep pushing us higher? I'm not sure that's going to be the narrative because semiconductors are pretty overextended to the upside. So, and if you can't tell by now, I'm very, what's the word? Conscientious of feedback. So, if you want to be critical, that's cool. I'm going to address it. So, Netflix hanging. Earnings for Netflix are after the close today. This looks like we need a retrace. But we've already kind of come down here, and we could go popping. Like, this is the gamble, all right? This is rolling the dice here. This could pop and bust on through. We've kind of retested the prior breakout here. That's where we are right here. We're retesting this prior breakout right here. This breakout zone right in here. We're retesting. If we hold that, which we have been for several days, that can result in a pop. Now, the other alternative is we just pop down here. We could possibly even open up here, and then that would set us up for the next move up. So which way am I betting on Netflix earnings? I'm not. And I looked at the price of those options yesterday, and holy beep, for 2 days of exposure, which is today and tomorrow, when today has earnings, man, those are some expensive options. Like an at the money was going for like almost $3,000 yesterday. And that's just a little rich for my blood. That's just one chunk of 100 shares. So I'll stay clear of this. Now I'm, like when I bought down here when we bounced, I may buy again if we get on to the roadmap line. I bought here at 400, sold out at 550 or whatever it was. I've not been worried about it at all because it hadn't set up the pattern again. If we come down and hit the roadmap line, hold, start turning up, I may buy again. But that was a 25% gain on shares. Like there was no data burn. There was no, you could have traded options and made a bigger gain. Yeah, but I could have lost all of it if I picked the wrong time frame too. So be careful out there. I've kind of gone on this mission to prove that you can make plenty of money trading just shares over the last couple months. I've made some huge winners, like many percent gains on relatively short duration option short duration share trades. And for those of you that don't think you can make any money on that, like, you need to reevaluate what you're thinking. Recalibrate your mind there. MSTR consolidating right below the prior resistance. This can break out, head north. Right there is the resistance. We've got to clear it to be heading up here. We could turn down there and go. We have not yet fully hit the roadmap line. If you want the roadmap line, you don't know what the roadmap line is, you go to the YouTube channel homepage. After we're done here, watch the video that pops up right there. Gives you the code and everything for free to put in TradingView or any other platform really. And if you want an easy button to just throw it on your chart, you're like, I don't want a code, I don't want to mess around. Links in the description down below. I have it for Thinkorswim, I have it for TradingView. You just buy it. It's like $5. You give me $5 and you get access to all that code. Easy button. You just click it, put it on your chart. And it's a really simple thing, really. I mean, I tell you what it is. All in the masterclass, all in the how to use it. SMCI coming down. If this breaks below the roadmap line, we're going to have to arc this down a little bit. This thing's getting a little aggressive here. If we break down below, watch out for that return to where we were, where we consolidated all of last summer into the fall. Actually, into the beginning of this year. Made a big run up. Would not surprise me. This is basically the same pattern as the bubble pattern right here. Look, let's move up. It's consolidation. And then we get the return. And if you haven't seen this before, check it out right here. This is the psychology of a market cycle bubble pattern. Look, that move up. It's never exactly the same, but it's a general pattern right there. Looks very much similar to this one. And we're working on this one too. A little bit different, but if we consolidate here, watch out for the return. Could be all the way down here. Now, I'm not necessarily super bearish on NVIDIA, but I want you to be careful. Don't lose a bunch of money chasing that one higher. It may or may not go higher. This is very, very reminiscent of Cisco in the dot-com bust. If you got questions, ask them. If you're requesting tickers, though, I do that on Tuesdays at 5 p.m. Eastern. Now, look, Chewy's on here, babe. Kimberly, my favorite subscriber. ASML, getting close. Probably going to push that right into the roadmap line. We could go a little lower. Be careful. Be careful, be careful, be careful. And that fib line doesn't matter anymore. So we could turn this into something deeper. Just be careful. That the reason I say be careful is because this is a big, fast mover. It's way overextended, and it can rip you pretty hard if you get long. All right, don't take big losses. Know when you're wrong. That's the whole thing. Like, know when you're wrong. Don't stay wrong, because staying wrong is what costs you the big money. Being wrong, we're all wrong here and there. I'm wrong all the time. I take losses, and I try to keep them in check, try to keep them relatively small, and clear them out when I'm proven wrong. Because when you stay wrong and you double down and you double down again, next thing you know, you're 4 times your normal risk, and then it keeps going down and you take a big loss. And I know there are traders that are here on the stream with me that have done that. I know you're here. I've tried to help you get out of that cycle, and a lot of you hear me. LRCX coming down. Look like we're going to hit that roadmap line sooner or later. The opportunities come when we hit support and turn higher. Chewy. Look at that, Chewy. Look at that pop. Holy moly. Holy guacamole. Get it? Chewy's is a Mexican or Tex-Mex restaurant. The audience. You guys are a tough crowd. So there's the resistance zone. If we can get above that, and this might be good enough today. I don't know. I'd really like to see it clear this high from right back over here. Probably sets the stage to continue on up, even though the consumer is weak. Restaurants having a hard time. This one, not as bad at the moment. Looking like a potential rally up to 46 right there. Elf Beauty. Oh, was that enough to touch? Oh, baby. Looky, looky, looky. We did the thing. This is one you want to watch. That may be all we need. Watch for a sub roadmap line bounce. Breaking back above this 200 area. Can take us on up to the target zone. Dun, 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 dun. Meta. Getting close to the roadmap line. Now, if we get down in here and find support, that indicates that earnings may be a pop. If we sit on support into earnings, of course, there's always the possibility that we do a bigger flush. We came up pretty much, yeah, all-time highs. We went, we gap filled it. That was the big play back here on the big gap fill. I haven't really watched Meta much since then. For those of you who don't know, me and Meta don't get along. It seems like every time I put risk on Meta, it decides to take my money. It's just kind of the way it is. I've learned not to touch the hot stove, so I don't typically trade Meta because I don't G and haw with it, as they say. So it is likely though, if we hit the support between now and earnings. I mean, look at last time earnings. We dropped down and then took off like a rocket right up to the target zone, then right back down into the next earnings. We'll see. And USD probably coming down. SMH probably coming down. There's a lot of semiconductors warning. If we've got an uptrend of lows right here cooking, and we tried to break down right here, rejected pretty hard, went back up, found resistance, came back down. If we get below that, it's the warning sign that we're coming on down to 85 to 90, 110 area right down here on AMD. This zone right here, probably coming down if we get below. If we come into this zone, watch out. That can go fast, and look what's coming up. Caution, 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 caution. Everybody get the point? I would not chase this higher or lower at the moment. AMD, for me, it's a wait. It's a wait till we get to the support and then buy, right? I mean, I took a trade and booked it out. I took a long, booked it out, came up short of resistance, and we're right back down. NVIDIA, so some of those short-term, small gains, all right? Small shots inside the bigger potential moves. And NVIDIA, I was a buyer when it was at 150. You know, it did do a split 10 for 1. So 150, I was a buyer here. How many people were buyers here? How many people knew that was the spot? I've been a seller ever since we passed what used to be like 350. All right. I was a buyer down there. Goose said I was a little bit crazy at the time. We did what I consider a measured bounce, and we took off. Didn't look back. I bought shares. You can say what you want to, but I took over 100% gain on those shares. Could I have made 200 or 300%? I could have, but 100% was good enough, and I took it and moved on. ARM. Now, I expect NVIDIA to probably give it up because it's gone up a lot. Probably too much. But time will tell. And ARM at the target. You know, it told me it was going up right here. We got it. Now, highly likely we retrace. If not, come back and fill the gap down here. FSLR coming on down. Even though it's on the poppers list, it's probably working its way on down. Gonna hit the roadmap line there. ZIMV. There's no auto charge. I don't think it's an auto charge. You do get an offer to upgrade for 12 more months. 12 more months for like $20. I mean, that's a pretty good deal. So you get 15 months for $25. Not a bad deal. Plus you get in Discord and all the other information. ZIMV coming up. Resistance probably 27, maybe even 40 up here. That was a measured bounce. Probably getting to 27 at the minimum. 40 if we're gonna go bullish on that one. TECL may come back to the roadmap line. That is a 3x bull leverage on technology. DFS, they've got earnings coming up. Oh, they just did earnings. Yeah, that was yesterday. Popping. Yeah, financials looking mostly pretty good. DFS taking off. Should still be a buyout merger thing with Capital One. That one rocked and rolled right up to the target. Beautiful. Beautiful, beautiful, beautiful. Right to the... Watch out for that one to retrace now. Be careful. We're at the target. You know, why do I say be careful a lot? Because the opportunity has now become limited here. The opportunity was down here. It's not up here. All right, the opportunity to lose money on a retrace is up here. You know, waiting around for these opportunities and taking action when we've got a big down day in the market, that's tough to do, but it's where you make the big money. Amazon, likely to come on down. We've got earnings coming up right here next week. Watch for that one to retrace a little deeper. We can get there. May find the energy to bounce and go cruising on up here to the 240, 250 target up there. Dell, coming on down. Right there to the roadmap line. MU, probably coming on down. VRT, probably coming on down. DPZ, ooh, getting a little retrace. Still, nothing changes here. Long-term target, still down here in the 200, 250. Now, I've got alerts. Look at this. Alerts all the way down here, 180. I am that bearish on this long-term. I have a synthetic short position. It's synthetic stock using options, and it's short. If you don't know what that means, probably should spend some time on Googling it on Investopedia right there. EFX, Equifax. Probably going cruising, 285. AGEN. Ooh. Careful on this one. It is basically a dumpster fire. Reverse split. Giant downtrend. Rejecting off the roadmap line. Watch for that one to go on down the toilet. And it's biotech. All the things that make it horrible. UNH coming on up. Targets here and here. Yep. There you go. CRWD. Probably going to return to the roadmap line. NVS. Probably going to come back to the roadmap line. Novartis. DPST. Looks like... Well, that was on the droppers list, but now it's turning itself around. Still got that target up here, 120, 122, 115, 122 area right there. Still the upside target. CMG, there you go. I said we were going to retrace after the split. Watch for AVGO to do that too. And NVIDIA, I mean, all those big splitters, they're probably all going to retrace pretty violently. And that's food stuff for you. If the consumer is actually weak, be careful. I could find support in this zone right here. CETU. Cetus Capital. That's a SPAC if I ever heard one. Nothing there to mess with. Sony. Beautiful. This is a measured bounce. The target, minimum target, right up here, 122. Be disappointed if we don't get there. And now it can retrace. It can come back, hit the roadmap line, and be on the way up there. In fact, that would be healthy for it to do a retrace at this point. Back, retest the roadmap line, and get continuation on up there. 139, possibly 160. Now, if we stop here, that's a big red flag, and we're probably going lower low than what we did over here. So that's the big red flag. If we stop at that 122 area, shy of breaking on out, even if we get up to 139, we can still do that. We really want to see this get up to 166 or better to get continuation higher. Kava, more food stuff, more weak consumers. We're seeing it all over the place. Restaurants are a warning sign right here. We're seeing it all over the place. Seeing it all over the place. Even McDonald's here. Look at that big pullback. It's not GLP-1 drugs right now. This is a weak consumer flashing right here. We're seeing it all over the place in restaurant companies. All over the place. This is very consistent. Problems brewing and people going out spending money at restaurants. And you can say, well, it's this, that, or the other. Yeah. The takeaway, though, is there's a problem. That's the big takeaway. It's not necessarily there's a trade to get, but it's a warning sign for other things happening here. Tesla 1 minute. I'm just curious. Hope that plays on out. I actually left a long on Tesla yesterday at the close. Hopefully that's going to book it out. Dun, 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 dun. Tesla. I think I skipped that on the daily chart here. Pum, 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 pum. Here's what we got. We got earnings coming up next Tuesday. Now watch for a pop. If we get up into this zone up here, I'm actually going to set an alert now because I'm that concerned. If we get an alert up here, it might be smart to lighten up your load or add some protection because earnings is likely to see us get a large retrace. Could be, this could be pretty wicked. If we get up to this ideal 275 target area, we could be looking at a 30% drop, like 90 points on earnings. It might be lighter. It might only be like 70 points. And it could last 13 days after earnings. That these pullbacks typically last about 13 days post earnings. Like 70 high, pretty high percentage of the time we drop on earnings. I'll talk about that more on Monday and Tuesday of next week as we come into Tesla earnings on Tuesday after the close. That will be happening during 30 Minutes of Awesome. So I'll be live and we can talk about it when it happens, see which way it goes. Earnings are usually a coin toss, but this is setting up a pattern that looks like it might tell us exactly what it's about to do. SOXL, coming on down to the roadmap line. AMAT, coming on down to the roadmap line. AVGO, coming on down to the roadmap line. QCOM, coming on down to the roadmap line. It's like a broken record here. COF, oh, look at that, right up to the targets. Amazon, coming on down, probably... could do it before we could get there, especially if Tesla pulls tech down. Watch out for that. Yeah. Be careful. I kind of hit a bunch of those already. CMG. SOXX is bearish. Semiconductors leveraged. And Footlocker. I'm actually kind of bullish on this. This is a measured bounce, potential target, and it's a long-term. What options would you buy? I probably wouldn't. I'd probably do it in shares. But there's your target up here. Actually looks best on a non-log scale because it's not moving over $50. Target 47.50, and it could take a while. How long of a while? Sometime out spring next year. This is a measured bounce. If we break down below the danger zone, though, the danger zone right down there, watch out for a move on down to $9. Be like, well, they can't go to that. Well, it was at $14 not that long ago, so it's only at 25 now. The danger zone is important. This was a chart of the week a couple weeks ago, I think. I think I put this out. It's been a while. It's been working on this a while. Now, conservative entry hadn't even triggered yet, which is above 31. Aggressive is now, basically. If you wanted to be aggressively long Foot Locker, or almost a double, just on shares. But this was on the biggest droppers list, so be careful. It's kind of coming back up, almost flat now. Bias for the day before we wrap this baby up. And remember, I will be back live tomorrow morning. Same bat time, same bat channel. As always, we're just kind of churning here. Got that gap down we did there. We're going to have to get back out of here. So the NASDAQ's the real story. On that smaller time frame, we rejected. Took it right back. Didn't get through the resistance yet. Return to go. That's starting to look a little sketchy. If we extend lower, it resets everything. Something to keep an eye on right there. Need to get that back above there. Need to get up to this level up here before we do a retrace. So right now we've kind of mucked up the pattern, as I might say. And if we push lower than this low, it just resets everything, and we got to look for a new potential reversal. This one was pretty good, but it may reset it right there. A lot of those semiconductors still need to go lower. A lot of the money was in AI hype that was taking us higher. So be careful right there. I'll see you tomorrow. Have a great day, everybody.